My name is Hildia Taina.
My name is Rachel Vasquez.
My name is Ana La Torre.
My name is Jasmine Sanchez.
Our group researches the depressions that occurred during the New Industrial Order, the Panic of 1873 and the Panic of 1893.
We explored the various causes that led up to these depressions, both political and financial.
We also discussed the effects that these financial crises had on people like bankers, miners, farmers, company owners.
Lastly, we compared these panics that occurred over 200 years to the recent recessions that started in 2008. The end of the Civil War marked a period of rapid industrialization. The country's borders had been pushed west, and the railroad companies scoped out western plots of land to lay down miles of track. Banks and the federal government invested heavily in railroad constructions by providing land grants and loans to railroad companies. The J. Cook and Company firm had been the chief investor of the industrial effort. The company became the bond agent for the North Pacific Railroad Company and financed the majority of the construction expenses of the nation's first transcontinental railroad. Unfortunately, Cook struggled to sell railroad bonds to investors. Consequently, he carried the burden of owing 75% of the company's assets to his investors. When the news became public, many of the bank investors removed their investments from his bank. Thus, it was over-speculation that led to the firm's inevitable bankruptcy on September 18, 1873, and the country was driven into an economic depression. The firm collapse served as a catalyst for the closure of other banks that were formerly invested in the Cook & Co. firm. The shock of so many banks failing at once shut down the New York Stock Exchange for 10 days. Since railroad companies and other business relied on banks for loans, 89 of the country's 364 railroads soon folded. Since the railroad industry was the nation's largest non-agriculture employer, unemployment rose to an alarming 14% by 1876. Another major cause of the 1873 depression was the ratification of the Coinage Act. The act favored the coinage of gold over silver. As a result, the value of silver declined so much so that it could no longer be extracted for profit. Consequently, silver mines all over the nation went out of business, leaving thousands of miners unemployed. Since silver was virtually taken out of the money supply, the economy experienced deflation. These economic conditions were unfavorable for many Americans who were in debt, particularly farmers.
The 1870s marked a period of conflict between two opposing schools of thought, specifically social Darwinism and democratic liberalism. Social Darwinists argued that one's state of poverty or wealth is entirely dependent on one's work effort and talent, not political policy. Social Darwinist William Sumner declared government is not responsible for ensuring that social classes collectively contribute to the needs of other citizens. Since conventional wisdom accepted the tenets of social Darwinism, it should come as no surprise that the government restricted its control of the market during the mid-19th century. These principles conflicted with the desires of many working-class Americans who were suffering financially. The working class requested the government implement monetary policy designed to help the working class majority over the corporate minority. Specifically, struggling farmers called for the government to release more money into circulation in order to increase inflation so they would receive more money for their crops. Ultimately, the government favored the interests of bankers and corporations by passing the Resumption Act of 1875, which took all greenbacks out of circulation and made it exchangeable for gold at a fixed rate. Thus, the banks were in total control of loaning money instead of the government. America's working class responded by going on strike and forming workers' unions. The Knights of Labor was the most influential labor organization of this era. The Knights aimed to organize skilled and unskilled workers. The association was very inclusive and was composed of men, women, blacks, and whites. The Knights rejected the tenets of social Darwinism and urged Americans to participate in the creation of a collaborative commonwealth. In other words, a society in which all citizens cared for the needs of others and supported a government that provided essential aid to those who were suffering. Labor unions demanded government control of investment and complained of excessively high freight rates, poor working conditions, and low wages. In order to voice their appeals, labor unions held strikes that were often resolved violently. One of the most documented labor strikes of this period was the Haymarket Affair. On May 3, 1886, laborers in Chicago protested the murders of 4 strikers from the McCormick clan. At one point during the event, a protester threw a bomb at a police officer. The panicked police responded by opening fire on several innocent bystanders. The Haymarket Affair served to stigmatize the labor movement as violent and unpatriotic. Although the pleas of the labor movement were largely unfulfilled, The movement set the stage for debate concerning how government should curtail the potential abuses of capitalism in a democratic society.
As a silver miner, I was hit pretty hard by the Depression of 1893. It was considered the worst ever in American history until the Great Depression, with unemployment rates reaching 20% at its peak. One of the biggest causes of this depression was the free silver crisis. Several new silver mines were opened in the 1880s, causing silver to flood the market and the value of silver to drop. Farmers in debt and miners like me wanted to artificially raise the price of silver in order to cause inflation so they could pay off their debt with cheaper dollars. Creditors and businessmen would have been hurt by this inflation and wanted to stop it. The federal government listened to the poor farmers and miners and passed the Sherman Silver Act, which required the U.S. to buy millions of ounces of silver per month in exchange for treasury notes that could be redeemed for either silver or gold. Of course, everyone traded their notes for gold, and soon the country's gold reserves reached the minimum limit. In order to prevent national bankruptcy, President Cleveland borrowed $65 million from banker J.P. Morgan. Another major cause of the Depression was the overbuilding of railroads. During the prosperous years of the 1880s, railroad construction boomed, accounting for 20% of national investment. This growth rate couldn't be sustained, and on February 23rd of 1893, the Philadelphia and Reading Railroad Company went bankrupt, the first of a long list of railroad companies to collapse during the Depression.
Like silver miners, farmers were certainly not strangers to the woes of this depression. Due to droughts, storms, and overproduction of crops, the agricultural industry was devastated. Farmers struggled to yield and profit for their crops as the prices of wheat and cotton exports continued to fall. They went into debt and their farm mortgages were foreclosed. In response to their fiscal distress, indebted farmers and unemployed laborers coalesced and held labor strikes. Some of the most documented strikes of this period included the bituminous coal miners' strike, an unsuccessful national 8-week strike by miners of bituminous coal in the United States, who demanded their wages returned to the level before the panic. Another nationwide conflict was the Pullman strike, which shut down much of the nation's freight and passenger traffic west of Detroit. The conflict began in the town of Pullman, Illinois, when nearly 4,000 employees of the Pullman Palace Car Company began a strike in response to low wages. Then in 1984, Ohio businessman Jacob Coax led unemployed workers in Coax March on the Washington. Many of these strikes were resolved violently, yet these laborers sent the message that government should enact legislation to support unemployment for Americans. Once William McKinley was elected president, economic conditions began to improve. McKinley made gold the standard American currency in 1900 and encouraged consumption of domestic goods by raising tariffs to their highest levels in history. The U.S. began to experience a trend of economic growth until the late 1920s, when the American economy would be faced with even more adverse economic.
Like the depressions of the New Industrial Order, the recession of 2008 was primarily caused by poor banking practices and people in banks taking out loans they couldn't pay back. In 2008, Americans invested in adjustable rate mortgages. These investors were able to purchase homes with initially low interest rates, but eventually the prices of houses began to decline and their mortgages greatly increased.
The causes of the 2008 recession parallel the causes of the Depression of 1873. The root of both economic zones was the poor investment decisions. In 1873, the J. Cook & Company Bank loaned money to the railroad companies that the firm could not pay back. The bankruptcy of the firm caused a domino effect of the bank failures that decimated the economy.
Both the depressions that were experienced now and those of the New Industrial Order had significant social repercussions due to the major job losses. Because of this, the working class took the brunt of the blow and families suffered the most.
Looking back at financial and historical trends, we can see that these depressions occur every 20 years. Looking back at historical events, we can conclude that poor investment decisions usually escalate to economic crises. We should learn from our past mistakes to prevent future economic misfortune as disastrous as the ones we discussed today.